Have you ever wondered what's really going on in the mind of someone who's watching their investment absolutely tank and they just do nothing? Well, today we are diving deep into the psychology of HODL. You see, behind that simple four-letter word is a pretty wild case study in human belief, loyalty, and yeah, some of the emotional traps we all fall into. HODL. I mean, you've seen it everywhere, right? In the crypto world, these four letters are so much more than just a word. They're a mantra, a philosophy, and for a lot of people, a badge of honor they wear through the craziest market storms. So here's how we're going to break it all down. First, we'll get into its hilarious origin story. Then we'll explore it as this act of rebellion. After that, we got to talk about the emotional trap it can set. From there, we'll see how it builds these incredibly resilient communities. And finally, we'll try to uncover the real wisdom behind the whole HODL mindset. All right, so how did this whole thing even start? You might think it was cooked up in some Wall Street boardroom or a stuffy university lecture. But nope, the real story is way more, well, human than that. Get this, it all started with a typo. Someone, in a moment of, let's call it intoxicated frustration, was trying to type "I am holding" in a Bitcoin forum, but what came out was "I am hodling." And what started as a simple, funny mistake just took on a life of its own. It went from an inside joke to a serious mantra for a whole movement. And this is what it really means when you get down to it. To hodl is to hold on for dear life. It means when the markets are crashing, when every headline is screaming sell, when your own portfolio is just a sea of red, the true believer, they don't even flinch. They just hodl. But look, this isn't just about spreadsheets and financial discipline, not even close. To really get what HODL is all about, you have to look deeper into the psychology of it. It's an emotional act, not just a logical one. At its absolute core, holding is an act of faith. It's faith in a new technology, right? Faith in the whole idea of decentralization. And it's faith in this dream that maybe, just maybe, this new way of doing things can actually outlast the old systems. When people hold, they're not just holding on to digital coins, they're holding on to a belief about what the future could be. And this is where it plugs into one of our most powerful instincts as humans, loyalty. It's loyalty to a cause, loyalty to a community, and, in a way, loyalty to your past self. You know, the person who took that initial risk and believed in something before everyone else did. So that loyalty, well, that's what makes it a form of rebellion. It's a very conscious choice to just defy all the noise, all the panic, and all the pressure from the traditional systems that, let's be honest, don't really get it, or maybe are even a little scared of it. So what exactly are they rebelling against? Well, they're saying no to panic and fear. They're saying no to FUD, which, stands for fear, uncertainty, and doubt, that gets spread by all the critics. They're pushing back against the old financial world and just completely ignoring the distracting chatter of short-term market noise. Okay, but here's the thing. This powerful commitment, this mix of faith and rebellion, it has a dark side. And this is where the psychology gets really, really tricky, because belief can turn into a blind spot so fast. That emotional bond that gives hodlers all their strength, it can also become their biggest weakness, because when you're that invested in the story, it becomes incredibly hard to make a rational call that goes against that story. And you can almost feel this internal conflict happening, right? On one side, you've got the feeling, this is a story, it's not just a number on a screen. And selling? Well, that feels like a betrayal. But that powerful feeling creates a dangerous bias. It makes us ignore the red flags and cling to hope, sometimes long after logic is telling us it's time to let go. There's actually a formal name for this. Behavioral economists call it the endowment effect. It's this powerful little quirk in our brains where we put a higher value on stuff simply because we own it. And that's exactly why selling can feel like a loss, even when the numbers on the screen show it's a clear financial win. But it's not all doom and gloom. Not at all. Let's switch gears for a second. Because out of this really intense individual mindset, something kind of beautiful and powerful emerges, a collective resilience. The real beauty of the HODL culture is that it's not a journey you take alone. It's built these incredibly strong, passionate communities of people who back each other up during the absolute toughest times. And that shared struggle, it forges a seriously powerful bond. And these communities are basically built on a shared code. They all believe in the long game, not quick wins. They refuse to surrender to all the noise and the FUD. They're loyal to the cause and loyal to each other, all bound by this stubborn, unwavering hope. So we've kind of got two sides of the same coin, right? On one hand, it's this powerful psychological force for resilience. On the other, it's a dangerous emotional trap. And that brings us to the real wisdom of HODL. The question isn't if you should do it, it's whether you understand why you're doing it. And maybe that's the real lesson here. The goal probably shouldn't be to just blindly HODL forever. The real prize is self-awareness. It's understanding those psychological pulls of faith and loyalty and rebellion that are actually driving your decisions. This understanding gives us a pretty clear path forward, don't you think? It all starts with knowing your own biases, and from there, you can consciously choose patience over panic. You can train yourself to be less reactive to the noise, and you can learn from every single market cycle, the ups and the downs. And when you start to master this internal world, the benefits go way beyond just your portfolio. It's not about improving your financial strategy. It makes you a better human, more patient, less reactive, and just a little bit wiser with every single cycle, not just in the market, but, in life. So, I'll just leave you with this one last thought. After digging into the psychology of HODL, you kind of have to ask yourself, when it comes to our investments, and maybe even our biggest life decisions, is it possible the biggest risk in the entire portfolio is the person staring back at us in the mirror?